Trividity bam! Welcome to the Business MC channel. So, my net worth has shrunk by about 4%. Just to do some quick math. With a net worth of over $1 million, that's more than $40,000, which is more than an average person makes a year. What are the risks? Do I have to worry? Should I make a song about it? Well, the events of the past weeks have had a considerable impact on my assets. And of course I do have to pay attention, but I'm not worried yet. So let's take a look at the risks and what risk actually means from an investor's perspective. But first, let me say hello and thank you for joining. On this channel I share the experiences of my 6-year journey from mediocrity to millionaire, offering infos and shortcuts for business rookies and average people, plus insights in my everyday life, also as a beginner YouTuber, to inspire you and to entertain you, of course. Details linked here and in the description below. As an investor or entrepreneur, you should diversify. That's not new and you probably heard this before. It means to constantly modify and vary a product to meet the demand of the market and have a range of different products or engagements / exposures / investments to keep the risk low. How does that work? Imagine a company that is producing only one particular product for only one client. The risk is very high due to the fact that the company is completely dependent on the one client. If that client withdraws the order or runs into financial or other problems, it quickly becomes dangerous for the manufacturer. That's why, as a company owner, you should have a broader range of offers and also several almost equal clients, so the risk is low when losing one of them. As an investor, you need to be in different industries. One of the most common types of diversification is, for example, a combination of real estate plus gold or other precious metals plus corporate investments, respectively stock market shares. It's all about keeping the risk low. But what does that mean? And what does risk actually mean? 2 examples. If you play the lottery for a few bucks, the risk to lose them is very, very high. But the risk of a major financial loss is small. And the advantage is you could make millions out of a few coins. If you bet 10,000 euros on red in roulette, the risk of losing is relatively low because you have a 50% chance to double your investment within seconds. But the risk of a major financial loss is pretty high, because in 1 out of 2 cases you have 10,000 euros less. So it's always these 2 options you have to weigh. But now let's move on to the practical application. What do I do so I don't have to be scared of what will happen next? Let's start with my real estate investments, because there's a lot to consider. The value is increasing because of demand and interest rates are still relatively low right now, and I have passive income from rentals serving the loans. The risk is that interest rates will rise sooner than expected a couple of months ago, which is a result of the high inflation rate you probably heard of. We see it because of the pandemic, and it's also driven by the war in the Ukraine. Everything is getting much more expensive, and that means for me that I need more money to serve the loans. When doing the math on an investment, I always also calculate a worst case, a realistic worst case scenario to find out if it still works when the conditions are getting tricky. Because of the current situation, it could get to the point where I have to add extra money to service the loans, resulting in a decrease in my net worth. Small advantage on the other side, the value of the outstanding loans decreases faster as well due to the high inflation rate, so I eventually have to pay back a smaller amount, or rather a lower value than I borrowed. Coming to gold. That's a short story. I sold almost everything I had in September 2019. There was a 10-year high at that point, and I saw a chance to buy it back a lot cheaper in a few weeks. Of course, I have constantly watched the price. Just after about 40 days, the price started rising and is now almost 50% higher. I mean, I didn't actually lose money, but it doesn't feel good that I have missed a chance. My learning? Never go all in. Keep that in mind. Finally, corporate investments, respectively stock market shares. I personally prefer corporate investments to shares. Why? Because I can have a closer look into details and the daily business if I want to, and I can contribute my expertise to help growing. Especially with startups, you have to be wise not to bet all your eggs in one basket and examine the chances very, very carefully beforehand. Of course, I watch the stock market, find it very interesting, and I think I will try it out sooner or later. But at the moment, I love the role as a supportive investor. All in all, it means that my net worth in 2022 will not be growing as fast as usual. Coming to a BAAM summary. Quote again. Peter Drucker put it in a nutshell. All profit is derived from risk. So, if you want to profit, you have to take the risk. Just know the risk, question if you're willing to take it, and be sure you can afford it if it goes wrong. Then you'll be fine. That's been it for today. Bam the subscribe button if you haven't already, and support me on the road to 1 million subs, or at least have fun watching me fail. Stay open-minded. Tschüss und Baba. Two more things. The announced change of the look needs to be postponed. I'm sorry. And in case you're wondering about my New Year's resolutions challenge, nothing new to report. Everything according to plan.